Hey guys, good morning. Good morning to all of you and welcome in this session of Oliveboard. So as you guys are aware that we are doing one important topic a day to cover as much as possible of the most important topics for your syllabus which IIBF regularly keep asking in the exams. So this is Dr. Pradyumna Sharma and today we will be talking about types of companies. Almost in every attempt, IIBF have asked one question from this particular topic, which is uh, types of the companies. So, if you are observing, we will be covering only one topic, okay? Because we do have a limited time in these batches on the YouTube platform. So if you want to prepare things in a very systematic way and if you want to have a comprehensive coverage of your syllabus, you can join me through the super elite plan through the PDY code. That PDY code will give you maximum discount on this subscription as well as it will directly connect you with me. You please should subscribe the channel because in these 40 days you need whatever help is available, you need whatever guidance is available. So whenever a exam oriented session appears on the YouTube platform, if you already subscribed the channel, you will get the access to that particular video immediately. You will get a small push notification for that, and believe me, it's not a disturbance kind of message, it's a message which keeps you alert that okay, my exam is coming. Because in the routine work, a daily work of the office, normally we are unable to maintain that urgency of exam. So to maintain that urgency, these things are very important. You can join me through the all-in-one combo batch also. This all-in-one combo batch is again uh, a batch where you will get the uh, coverage of complete content from the examination perspective in a summarized way, and you will be able to do the practice of multiple choice questions. Now this also you can join through the PDY code. Now today we will be talking about company accounts. So few things about the company accounts is, first point, company accounts are prepared as per the guidelines of section 128 makes it compulsory for every company that every company have to prepare its financial statements or accounts. Second, when a company prepares financial statements or accounts, they have to follow the schedule 3rd of the Companies Act. Now that schedule 3rd have two parts. Part 1 provides the format of balance sheet and part 2 provides the format of profit and loss account. So these two things also we have to remember. Part 1 is for the balance sheet and part 2 is for the profit and loss account. When a company prepares its accounts, they prepares financial statements, and as per the accounting standard 1, financial statement includes only a selected list. First, it includes balance sheet, Second, it includes profit and loss account. Third, it includes cash flow statement. Fourth, it includes a statement which shows the change in equity. So statement of change in equity is also part of financial statement as per the accounting standard 1. And the fifth thing is notes to accounts. That's the explanation of all the accounts. So you should remember these five names. That financial statement includes those things. But before going into the accounting perspective, see, accounting perspective is something which is obviously it's relevant for your exam, it's important also. But because your examination pattern is multiple choice, types of the company is something to, which is very important. First, which is types of company, and second topic which is very important in this chapter is types of share capital. So today we will be talking about types of companies. See, so the first type of company we will understand these, we will have one example for each and every category also. First one is chartered company. So what does it mean by chartered company? A chartered company, it is a company which is created on the order of king or queen. So if we take the example of Indian context, Britishers used to rule us, and at that point of time, the company which established its rule in India was East India Company. So the East India Company kind of organizations are developed on the order of queen or king of British government or British empire. So that type of companies are called chartered company. So a company which is created by order of queen or king. For example purpose, let's remember one name, that is East India Company. Then the second category is statutory company. Statutory company, again, company, when a company is created by making a separate law. When in an economy a company is created by making a separate law, that an individual law for an individual company, already there is a companies act which is common for every company, but there are certain companies which do have their own law. Let's have an example. All your banks comes under this category. You can name LIC into it, Life Insurance Corporation. That's also a statutory company. So these type of organizations are called statutory company. They have their own act also. Then there is a registered company. Registered company, any company, be it the chartered company or statutory company or any other company, when a company is registered under the Companies Act, company registered under Companies Act. For example, Reliance Industries Limited, Tata, all these are registered companies. Any company which is registered. State Bank of India is also a registered company. Like LIC is also a registered company. Every company which is registered in India is called registered company. Then the very important one, that is foreign company. So when we talk about the foreign company, remember it is a company which is not incorporated in India, not incorporated in India, but have a business in India. So there are many companies which is not incorporated in India, but they have the place of business in India. And for example, Apple Incorporation, Microsoft, these are the examples of foreign company. So when a company which is incorporated outside India and they do the business in India, we call them as a foreign company. Now, what is private company? So a private company is where certain conditions are fulfilled. To frame a private company, you need minimum 2 members and maximum you can have 200 members, not more than that. So private company can have maximum up to 200 members. Their name always end with the private limited word. These type of companies can't issue shares. They cannot sell shares to the public. These type of companies are called private companies. Let's have some examples for the private companies which are not selling shares. Like you can take the example of Oliveboard itself. Oliveboard, that's an example of a private company. Now, what is public company? So, in a public company, things will change a bit. You need minimum 7, and there is no limit on maximum member. You can have n number of maximum members in the public company. There is no limit. They always ends with the word limited. At the end of the public company, there will be a term limited. One more thing about the private company, we need minimum 2 directors. In the public company, we need minimum 3 directors. They are allowed to issue shares. They can issue shares to the public. An example for a public company is, you can name any, like State Bank of India, let's name it as a Punjab National Bank, is a public company. Reliance or Adani is a public company. Tata is a public company. All these are the public companies. Then there is a government company. So see, government company is not a different type of company. Simply, if government own more than 50% in any company, if government owns more than 50% of any company, that company becomes government company. For example, Coal India, GAIL, BHEL, all these are the government companies. Then what is holding companies? Let me explain holding and subsidiary, two different types with each other. So when we talk about the holding company, remember, if there is a company X which holds greater than 50% of Y, like the ownership of the Y, more than 50% of the ownership of the Y is with X Limited or X company, then X becomes the holding company and Y becomes the subsidiary company. Then the other classification is when the company is limited by its shares. It means if you are investor in these type of companies, liability is maximum up to money invested. So whatever amount you have invested in the shares of this type of companies, your liability will never go above that. For example, any 99% companies in India or 99.99% companies in India belongs to that category only. So you can put any name into this particular, like Infosys. This is an example for the company limited by shares. Then there is a company limited by guarantee. When we talk about the company limited by guarantee, in this case, liability can go up to max up to the amount of guarantee which is provided by you. Technically, organizations which are uh, developed for charity purpose or social service purpose or promotion of some art, culture or sports, so that they comes under this particular category, like Mumbai Indians Limited or the company which is running the Mumbai Indians. Some hospitals come under that category. So technically, these are the welfare kind of organization where people who are willing to provide the welfare to the society, or people who are looking to promote uh, certain things, they uh, do they develop that kind of companies. It's very rare to identify. Even I think Mumbai Indian is also a converted into a society based company, which is also not a guarantee based now, but initially when it is developed it was based on guarantee from the Reliance Foundation. Okay, now company with unlimited liability, as the name itself suggests, in this type of companies liability is unlimited. That means in case of loss, if these type of companies incurred some loss, in that loss making situation, for the recovery of the loss, your personal property could also be sold. Your personal property is at stake. They can sell your personal property and recover the loss amount. That's the type of companies, and there will be, at least one question. I don't have any example for company limit with the unlimited liability, but normally the family businesses, if there are some family business, they can create an unlimited company. Normally, everyone tries to ignore or everyone tries to avoid making an unlimited company because personal property becomes pledged in this case. So this is about types of companies and it's a very important topic. Don't forget to subscribe the channel. If you like the session, please hit the like button. Let me know in the comment section that you guys are enjoying this series or not. You can join me in the all-in-one batch also. That's the combination of crash and cracker, and it's an excellent batch to have to crack the examination in the period of like 38 to 40 days. So that's the only solution you have if you are smart enough and if you are committed to crack. This is the way you can crack the exam. So thank you guys. Thank you very much. We'll meet tomorrow with the new topic on the new discussion. Till then, have a great evening. Bye bye. Thank you.